Jonathan B.J. Hayes, local realtor here in beautiful Port St. Lucie, Florida. Thank you once again for returning back to the home of Port St. Lucie Real Estate. As always, make sure you subscribe to the channel, share the videos, like the videos, and tell a friend about the wonderful things going on here in beautiful Port St. Lucie, Florida. So guys, we're going to have a little conversation today about what in the world is going on in the world of financing when it comes to buying a house. So as you all know, the Fed hiked up their interest rate. And normally when the Fed heightened their interest rate, the mortgage lenders follow. Normally. Well, in anticipation of the Fed raising the rates. Like all these lenders know that the Fed's going to raise the rate for the rest of the year. So what they do is they try to stay ahead of it and they bake in increases themselves. Well, this time with the increase, mortgage lenders decided to lower their rate. So just to give you like on average, so about a few weeks ago, interest rates were as high as 6% for somebody with an average credit score. Now, rates have been lowered down to about 5.5%, in some cases 5.32%. Why is this? So the reason you're seeing this is the mortgage industry up until this point believes that, as they will say, securities are still outperforming high-priced debt. So it's still in their best interest to keep the rate as low as possible, so all of you people out there who are on the edge of deciding, am I going to buy or not, will still have a reason to make that purchase. Remember, that's the whole reason the Fed lowered the rate as low as they did in the beginning. They were absolutely scared that nobody was going to do anything during the pandemic. So to sweeten the pot, they lowered the interest rates to all-time lows. The other thing is, the mortgage industry is still, at this point, not seeing crazy pre-foreclosure rates. Now, we don't have to be naive and crazy. If our finances in this country go down because of a recession, there's going to be a time where these mortgage lenders are going to see pre-foreclosures, meaning people are more than 3 months behind on their mortgage payments, and they would have to start that. They're not seeing that at this point. So this is allowing them to say, hey, let's lower these rates and take advantage of this while we can. And the last reason, there's still crazy equity in the housing market. Yeah, things are beginning to change and, the price of things are coming down, but there was such equity built up over the last 2 years. It's still in mortgage lenders' best interest as of today. This could change because none of us have a crystal ball. It's still in their best interest to say, hey, lower these rates and keep people coming through the turnstiles. So there you have it. I know that I'm getting a lot of questions on, hey man, the Fed raised the rate, but mortgage, rates are coming down. That is the reason why. Guys, comment below. Let the community know what you think is going on. This is your channel. This is where all of you guys can get the most up-to-date information about Port St. Lucie real estate. So until we meet again, everybody, thank you once again for tuning into the channel, the home of Port St. Lucie real estate. This is Jonathan Hayes. Everybody stay blessed, be blessed, stay blessed, and make sure you're safe during this summer. And we'll see you next time.